Hey everyone, my name's Andy. My channel is Finding Value. If you like making money, definitely subscribe to the channel. I'm going to talk about the most undervalued sectors in the world for investment opportunities. Today, I'm going to talk about two very undervalued investment opportunities. One that I'm going to do kind of like a case study here. I'm going to show you what I looked at, what the charts look like, and why I invested so heavily in uranium and oil in October, November of last year in 2020. I was doing this real time on the channel. You can go back and look at my older videos to see what exactly I was doing and presenting at that time. I opened up this channel August, September of 2020 because I thought that we were going to have a very strong move in these sectors and in commodities. And we have had a strong move. So I'm going to show you kind of what I was looking at, what I was doing. I'm going to walk you through the process of my thought process of why I transferred some money from gold and silver into oil and uranium and put some of my gold and silver companies into what I consider, quote, a free ride, which means I took my initial investments out, I left all my profits to ride, and I put those initial investments into oil and uranium because these charts and the opportunities were so large. And I'm going to show you what I was looking at and why the opportunities were so large. So I call this oil and uranium. And again, these are still incredibly good opportunities. So why I'm telling you this story, I'm stepping you through the thought process of why I did what I did. You can see what my logic is and the charts at the time that I was doing these moves. And I kept all of my charts from that time frame because I knew I was going to put a video like this together. So you can apply the same logic to other situations in the market when you see these opportunities. So I call this the energy swap. I invested heavily into oil last fall because of the reasons in this presentation. I'm going to show you a bunch of different reasons. I was explaining to a coworker the reason for my positions and why I thought oil posed a bigger return than my gold and silver companies, which then spurred this presentation. This is why I swapped a lot of my gold and silver companies to uranium and oil in October of 2020. And I put my gold and silver companies into, quote, a free ride. I didn't take all my money out. I just took my original investments out and put them into uranium and oil in October of 2020. And here's the why. Why did I do that? I positioned myself in gold and silver in March 2020 because they lead the move. They move first. So I heavily positioned myself into gold and silver because I knew that they were the first mover. They moved first. Technically, gold and silver were putting in topping patterns in August, September of that time. And uranium and oil looked absolutely insane at that same time for a bottom. So I decided to put my gold and silver companies into a free ride and use that money to invest in oil and uranium. I knew the energy sector had more leverage than gold in an inflationary environment, and the charts were showing strength in yields, in terms of yields going higher, which was showing inflation, and I was seeing dollar weakness. So I'm going to show you what I was seeing real time to show you guys kind of what was going on. So here's one of the charts. This is the US dollar bullish fund. We were at this time frame right in here. We were right at the bottom, moving sideways in October, and it broke out in December 11th. Is a big break to the downside. It was clear break in December. So October, November, we were at the bottom of this channel, and by me looking at some of the housing starts, at looking at yields, looking at all of these things, I was like, man, this is going to break to the downside. They're printing money. They're doing all these things. We have an expansion phase of real estate coming. I figured this was going to break to the downside, which was going to put pressure on yields to go up and also be a tailwind to oil and uranium. So here's yields. This is what yields look like November 6th. I said this is putting in a bottom. You can see the big moves up and the small pullbacks in terms of the big up days and the small down days. A character trait of a bottoming process ready to move higher. Then all of a sudden we started to move higher. This is a 50-day crossing a 200-day very shortly, and now we're somewhere up here. So this was coming to turn on up. So I was like, well, this is a bottoming process. We're going to see weaker dollar, which broke to the downside. We got this, and I went in. So what was I looking at real time? This is October 19th, SM Energy Company. It's $1.54. I saved the chart to show you guys this thing was putting in a very large correction, massively large correction. And it was coming in this downward sloping wedge pattern. And I was like, this thing's going to break to the upside very soon. So I'm going to zoom in on this section here and show you what I was looking at real time during that time frame. Now, October 19th, I saw this big move up and the leak off of sellers. We have buyers down here because we have a hammer, a nice sharp reversal pattern. Came back down, bullish piercing. Came back up, nice big move higher with a big candlestick, and then the slow leak off of sellers down. And right in here is where I started loading up. In October, it actually bounced down a little bit more, and then we shot and broke this downtrend line that goes right through here. Here's another setup, showing it a little bit later just to show you. This is QEP when I was buying it, which is now FANG that got bought out. This move across and over, and then the slow leak off the dead period right here. I was buying it right after this breakout very heavily at $1. And then we could see this nice move up. And then it kept moving up and up and up, and then FANG bought it. Unfortunately, I wanted QEP to keep going. Now here's Encore Energy, another one. This is October 13th. We have this basing pattern, this big, large basing pattern. This was the trend line here. It had broken to the upside of the trend line, and it's game on, and I started accumulating shares right in here. That was a good time to accumulate right after the breakout. I didn't know about ENCUF back here, otherwise I would have bought it down here. But I bought it over here. Vision Uranium Corp. See the downtrend line? Big downtrend line, multi-year downtrend line. Broke to the upside, and I started buying. Buy. And right here was where I bought a lot. October 13th at 23 cents, I was a big buyer at the bottom of this support line. Right there. Next Gen Energy. Again, October 13th. Doing lots of buying and shifting of money. Broke out, came back, going sideways. I was like, it's just chilling. The cheetah was chilling on top of the chart pattern of the break. This is a multi-year chart pattern. Broke to the upside. Uranium to gold ratio was extremely cheap. Bought the living heck out of it. $225 was the price. Deep Yellow. This is another one. Big 2017 multi-year downtrend. Nice big pattern. Broke to the upside. Buy. All through here. October 13th is when I was showing this pattern. This is the perfect time to be buying the living heck out of it. So the sectors and companies, just to kind of go over this, I looked at the charts of the companies, those ones that you saw, they're listed below. These companies were all putting in bottoming patterns. These sectors had unbelievably low gold to their sector ratios. Market conditions were putting a tailwind behind them. Oil had the sharpest, most disruptive oil price movement the world has ever seen. This will lead to supply disruptions in the future. And when demand comes back, we're going to see this large mismatch between supply and demand. This is one of the things I was looking at. This was the average. This is the new privately owned housing unit starts. This is the average kind of line going through here of what we should be building on average. This is the cycle, real estate cycle going up and down. And we're going into an expansionary phase, which is going to be inflationary and be a tailwind to our investments. This here is the gold to oil ratio. This is 5th of November when I was charting it out. I had captured this and we were at 50 to 1. 50 to 1 is signaling that oil was an extreme undervaluation in relationship to gold in November. And it was signaling that we should be buying the living heck out of oil. And usually what I do is I wait for the ratio to be cheap like this. And then I wait for these charts to give me an entry point like here. That's the perfect time to be entering. Same with QEP and all these other charts. So everything had an alignment. We had cheap ratios. We had the charts looking to say buy them, and I went for it. So there's a couple of things I want to talk about on the fundamental side of things as well. So the supply side of uranium's not mining much, if at all, at the moment. The market is in a standoff between producers and consumers. The supply of uranium is shut down at current prices, and prices will eventually move higher. The longer the standoff, the higher the future price will go. Time is being eaten away from the ability of the supply to respond to demand as this standoff waits longer and longer. And one thing to keep in mind is I think we're going to see a very large spike in uranium depending on when and how this plays. It could be a very large spike. And it depends on how this plays to the fear of people and the greed of people. The oil demand, I'm projecting a more opened economy after the vaccine was deployed and infections. They typically, in terms of virus, I should say, the virus is a lot more muted and typically declines during the summer, like the summer of 2020. So if the supply of oil is disrupted and remains low for a while, and companies are not able to deploy capital easily, remember, they have hedges in place as well, which is going to delay that capital from being deployed. So if that capital doesn't go into increasing production, we are not going to raise production here. And you have demand that could surge higher at any moment with more travel and pent-up demand. So this really only would affect oil, as oil was the most heavily hit and the demand would come back from airplanes and car travel. Another thing I want to put in this mix is a lot of hedge funds and mutual funds and investment type people are not putting investments into oil or other carbon investments. They're drawing money from them. So we have this ultra weird scenario that is developing. And I call this a weird scenario. We have this weird scenario that has never happened in history before. We have a lockdown economy. We have the cheapest gold to oil ratio ever by a long shot. And it is located right at the beginning of a commodity boom and expansion phase of real estate in the United States, which, remember, commodities are priced in dollars. So we're going to have inflation. The opportunities here have never been this big, and this channel will capitalize on it. And if you haven't, click subscribe to the channel. So I want to talk about these conditions in this weird scenario. We have very low uranium and oil to gold ratios, unheard of ratios. We have changing market conditions for a commodity boom. An event happened at the end of a structural move that is about to happen. Structural being that we're going into commodity boom, and the event being COVID, which completely messed up the supply of some of these, of oil and uranium, some of these commodities. The charts looked ridiculously good, and they still look ridiculously good. Money printing and inflationary pressures also back this with the charts in terms of yields and the dollar declining. So I want to go over these unique scenarios here. So uranium is ultra unique here. So electricity demand will increase with time. Electric vehicle cars, other gadgets, etc. Uranium has the lowest carbon footprint of any energy source from start to finish. It uses the least amount of land for a footprint and generates baseload stable energy, which is unique in itself. It is cheap compared to renewables and their storages of energy. It has high energy return on to energy input, and it has huge leverage to inflation and an anomaly for value compared to history. So I want to, guys, this is oil and uranium are they're in extreme unique situations. Uranium has never been this cheap in relationship to gold. It's an anomaly in history. We've never seen the demand fundamentals in front of us in terms of supply, demand, and balance so out of whack. And we're below the cost curves of the uranium producers. This is probably one of the largest, most unique scenarios I've ever seen. Oil as well. Oil, I've never seen as unique of a scenario as well with that. And the reason being is we had an event that created a scenario that completely destroyed the supply side of oil. that destruction is going to manifest itself, I think, very soon and could manifest itself very quickly. We have a scenario where demand could come rushing on back and the supply is hindered. When we go into a commodity boom, it's going to put ever larger demands on oil from the mining sector. And if the demand, when that comes back in terms of flying airplanes and travel, it looks like the virus is least lethal when it's warm out. So you start tying this all together. Oil had this big supply problem because prices went negative. We had the ratio shoot us a buy point. We had the charts show that these things are putting in massive bottoms. We have demand that could potentially come back from COVID, the vaccinations. We have summer coming up. And if the virus gets depressed because it's warm out and everybody kind of flows back wanting to travel either through airplanes or through cars or whatever it may be, and this is all pent up demand too. And I mean, this just keeps going and getting better. Their accounts are now filled with, quote, stimulus money. You get stimulus money, pent up demand. You've got the virus that's going to relax. We've got vaccinations coming out. We've got supply disruptions on oil. If that demand comes back all into oil, we're going to see the greatest increase in oil demand in the shortest period of time ever. All at the same time that supply is hindered. This could set up a scenario where we could see an oil price move this summer that just dwarfs anything. Because if supply can't come back online very quickly, and we get a 10 or 20 million shift in demand like this, I don't know. This is a weird scenario that's forming up. And if you can buy these companies that are showing the chart patterns looking fantastic, it's showing that the dollar could drop out at the same time. This is a really funky scenario to think of. If you have that dollar drop, which it very well could, because usually when people come back and they start spending, it's inflationary. You could see the dollar fall quite rapidly and a gigantic demand for oil come in at the same time. Remember, energy is the biggest inflation hedge. And we could see this all happen right in one summer. So very, very interesting dynamic. I think we're going to see some very strong price moves potentially in oil for this summer and potentially in 2022. I don't have the exact timing here. So what I've done is I've positioned myself quite heavily in uranium and oil to capitalize on this unique situation and scenario. So that's where I'm putting my money. I'm very heavily invested in it. I don't know the exact percentages. I'm probably 50% of my portfolios are in combined uranium and oil. So about half. That's probably where it's at. Maybe even a little bit more than half, but it's somewhere in there. Of my overall net worth, it might be 15%, 20% of my overall net worth is in oil and uranium. And I'm even looking to increase that. And I'm taking some money and putting it into some very highly leveraged speculative options. So that's just kind of what I'm doing. I do not recommend that to anybody unless you are highly educated in doing this stuff. And I'm not going to try to go over that because I don't want you guys to get too mixed up in it. So thanks for listening. If you guys like this content, give me a thumbs up. And thank you for listening. This is Finding Value.